Good afternoon and welcome to this week's edition of Halftime Talk. And I'm honored to be joined by Antoine Halff, co-founder and chief analyst at Kayrros. Welcome, Antoine.
Thank you, Sean. Pleasure to be here.
It is obviously a big week for the world, obviously a massive week for the oil markets. We are now deep into the second week of the US-Israel attack on Iran and Iran's retaliation to the wider Middle East region from obviously very close exposure here in the Gulf, but also Iran has retaliated as far as Turkey and the Mediterranean. So this is, as we move through the second week of this conflict, it appears to me, Antoine, that increasingly energy infrastructure is emerging on the target list. Mm-hmm. Most of the first week, not so much, although we did have the sort of logistics issue, obviously the Strait of Hormuz being obstructed, and we'll come to that. But I wanted just to start on your views about this increasing targeting of energy infrastructure in this war. Not only the targeting spectacularly the other night of the storage facilities of gasoline in Tehran, but we had even yesterday here an attack on the Abu Dhabi Ruwais refinery, which has been was shut down yesterday after the drone attack. Uncertain as to the scale of the damage, but there's numerous examples across the region, the Gulf region, as we see the energy infrastructure increasingly targeted. Your thoughts on the outlook for that and the consequences that that could have?
Well, the consequences obviously could be huge. Actually, at the beginning of the war, I think there was a sense that energy infrastructure would likely be kept out of the fighting because of the probability of mutually assured destruction, if you'd like. The assets, the infrastructure is so vital for all the participants, all the countries in the region, that if you strike one, the likelihood of retaliatory strikes hitting another on the other side was too overwhelming. So that assumption, I think, held for maybe 24 hours, 48 hours, but was quickly tested as Iran started targeting or appeared to target infrastructure in the region. Actually, at the beginning, it looked like Iran was targeting soft targets, hotels, airports, not so much infrastructure. It looked like infrastructure was hit by falling debris, not intentionally. Then they became more clearly intentionally targeted. So yeah, but the attacks have largely failed. I mean, there's been some hits, but it hasn't been as devastating as one might have feared. So yeah, it's a long answer for.
Well, it's certainly, we saw yesterday as well the Bapco Energies calling a force majeure on their big refinery, one of the biggest in the region in Bahrain yesterday. We've got the Ruwais refinery, as I mentioned. We have some storage infrastructure.
Ras Tanura had some.
Ras Tanura earlier. And these, if you know, these are injuries or breakdowns that could take quite some time to recover. I suppose my point ultimately is that if indeed we see a continuation of energy infrastructure attack, process infrastructure, that even if the war was to end today or tomorrow or whatever, you would have a legacy that this event is already indicating that the energy sector is going to have a legacy of disruption.
There's going to be some scars, some long-lasting effects. And actually, the price increase that we've seen, I think, to me, has been surprisingly moderate so far. but we could see some lag, some lagged effects and some price increases that will outlast the fighting. But I think, what strikes me, what is really coming out as a big takeaway for me is how well prepared the region has been. I mean, everybody is aware that the Strait of Hormuz, the Middle East Gulf is a vital conduit for energy. And the local countries, the producer countries, obviously have been very, very aware of the risks for a long time. Even if the conflict that's happening today seems to exceed our imagination, our worst fears, I think there was a very high degree of preparedness. And we're seeing the demonstration of this very clearly, particularly in the case of Saudi Arabia. I think it's been very remarkable to see how well prepared Saudi Arabia was, how reactive the kingdom has been in adjusting production as far as we've seen from our.
Well, the Aramco CEO on the earnings call yesterday, which was the 2025 earnings, big numbers, but he also said that they were ramping up the East-West pipeline to the Red Sea up to its never previously seen before full and beyond capacity of 7 million barrels a day.
Yeah. So this is untested, right? The Saudis are pushing the infrastructure to levels that haven't been tested before. But from what we see, and we're trying to observe and to verify, confirm as much as we can independently from geospatial observations. From what we see, there's every reason to believe that they can really achieve those targets. So the proof of the pudding is going to be in the eating. But I think it's very impressive to see what's been done.
What about the UAE version, Abu Dhabi to Fujairah, that pipeline infrastructure also offering the UAE an alternative outlet for its premium Murban crude?
Absolutely. And the construction of underground storage in UAE has changed a little bit the situation over the last few years. So, I spent several years of my life at the International Energy Agency in the oil division, running the oil division. And we had emergency preparedness exercises with our member countries and also non-member countries every now and then on a regular basis. And we tried to come up with the worst case scenarios. An attack on Abqaiq was one of the worst case scenarios. We saw that in 2019. A blockage of Hormuz was the absolute worst case scenario, and this is happening today. But our assumptions was that in the event of a blockage of Hormuz or even an attack on Abqaiq, the price increase would be dramatic. We haven't seen that kind of price increase so far. And that's largely because of the supply response, which was not in our simulation exercises. We were all about the consumer response and the demand response, not so much about the supply preparedness.
But we did see on Monday this week a Brent crude oil spike up to nearly $120 a barrel, and equally retreated gave up those gains. But one of the triggers to the retreat of the oil price after it spiked on Monday was that the G7 countries were meeting to discuss the release of strategic petroleum reserves. And I would imagine in your former life at the IEA, that would have been a no-brainer remedy for these moments, these worst case scenario moments. And I wanted to get your thoughts on the fact that actually the G7 countries chose not to release. If this wasn't a moment to release strategic petroleum reserves, what are they for?
Yeah, I mean, they haven't released yet. I think we could see some release later. One of the things that is different about today compared to previous emergencies in the past and previous IEA releases is the level of transparency we have about the events on the ground. There's the fog of war, there's a lot of uncertainty, and the price gyrations, I think, have a lot to do with the messaging from the IEA, but mostly from the Trump administration. So when Donald Trump yesterday or 2 days ago said the war is basically done, we're done, we can do a little bit more, but it's finished, the price immediately went down for oil and the stock market went up. Then when he said the opposite, the price moved the opposite direction. So there's a lot of uncertainty, there's a lot of reaction to the headlines, but at the same time, there's never been more transparency in the system. Satellites provide near real-time imaging of situation on the ground. The analysis of satellite data has gone through huge advances thanks to AI, thanks to advanced machine learning. So we now have an ability to assess the exact impact, or as close as we can, the impact on the ground. And I think this is working both ways. It's taming, it's muting the volatility to some degree, because it's reassuring that the full worst case scenario is not really here. The infrastructure is holding up. At the same time, it might give a sense of complacency because we're underestimating where things will go from here.
Well, if you take the analysis, I mean, the reasons why they might release from Strategic Petroleum Reserve, not so much because of the price reaction, which might be a reason, but ultimately it's not the purpose, right? It's a supply disruption purpose, the Strategic Petroleum Reserve. And if you look at the biggest development of the last week is the increasing shut-in of Gulf oil production, starting in Iraq, migrating to Kuwait, Qatar, now
Right.
Saudi Arabia and the UAE have also announced shut-ins. You're talking up to maybe 10 million barrels of oil facing shut-ins that are nearly inevitable at this stage, that they will reach that scale. I mean, that's not an insignificant disruption.
No, it's massive and it's not sustainable. If it lasts a little bit longer, you're going to see a massive price increase and a massive demand response. That's the only way to rebalance the market. But I'm not sure we go to all the way to 10 million. Looking at Saudi in particular, biggest exporter in the region, in the world, the capacity to, as we said, to shift production, to shift exports to the Red Sea from east to west is quite large. So, if they boost the capacity all the way to 7 million barrels a day on the East-West pipeline, including the LPG, NGL converted pipeline, then that gives us about 4.4 million of export that can be redirected from the Gulf to the Red Sea. That leaves just about 1.5 million or so that's missing. So it's manageable in short term by drawing on preposition storage out of Kingdom. It's not an undersupplied market generally. So true, a lot of the overhang ends up in China, but there's some slack in the system, and which perhaps explains why the price hasn't gone to $200 just yet.
Just yet, I suppose. Well, that comes to the just yet trigger. The Strait of Hormuz as the ultimate logistics bottleneck and the biggest logistics issue in this war, from an oil and gas and fertilizers and everything else shipping relevant. How's your outlook for the Strait of Hormuz, the ability to get flow moving there?
It all depends on what happens with the fighting, right?
So do you sense the war needs to end in order for that flow to restart?
I think so, because right now it's not just a question of conventional weaponry, it's a question of drone attacks, and the RGC has a capacity of nuisance which is quite large, even if the conventional forces and the air defenses are downgraded in Iran. I think they're demonstrating today that they can do a lot of damage and create a lot of fear. So I think it's going to take time for the traffic to normalize. We'll have to see a normalization, a calming down of hostilities, and we're not there yet.
Do you think, I mean, what are your thoughts on the underpricing of the supply risk? We saw on Monday that obviously with the spike up to $100+, although it ended up not closing above 100, it closed just below $100 on Brent. But there was a sense that it seemed to me, at least, that it was more of an accurate representation of the supply risk profile that's at play here. Are oil markets underpricing the geopolitical risk?
I think they might. I think they might be underpricing it. I think they're pricing the disruption that we have today, which has been very large, but so far remains manageable. But I think there's a potential for continued disruption, continued price increase, and a much more severe imbalance in the market.
And if we see I mean, the indications were that yesterday, according to the Pentagon at least, was the biggest bombing day of their campaign so far. So this looks, according to the Pentagon at least, that the scale of ordnance being dropped on Iran is increasing, not decreasing, whatever Donald Trump said about being near the end of this. And Iran's reaction to that, one would assume, will be commensurate. Where is the biggest risks to this, as you said earlier, energy infrastructure, energy resilience that the Gulf has demonstrated so far? Where do you think the biggest weaknesses now are in an escalating conflict environment?
Well, I think this escalation sounds a very mixed signal, right? The harder the US pounds on Iran, the weaker Iran will be, and the closer Iran may be to capitulating. Okay, let's assume that. The flip side of this is that a completely devastated Iran will take a long time to stabilize, right? The political outlook, the social outlook is going to be much more uncertain. And the potential for continued turmoil, uncertainty, perhaps civil war, mayhem is much stronger in this event. So there's a very high cost in pummeling Iran in a hope of getting a quick outcome of the conflict. It kind of sends a mixed signal in my view.
I mean, it's in some ways it seems like there's two wars taking place here. One is Israel and the US are pummeling Iran with the sort of conventional bomb everything, Dresden, Gaza kind of strategy. And then the second war that Iran is fighting with drones and very targeted strikes on the Gulf area, hitting critical energy infrastructure and, putting a big stress on the global economy. How do you see those two things? Does one sustain longer than the other? I mean, a lot of people accuse or sort of charge, at least in the last few days, that remind us of the TACO acronym of Donald Trump always chickens out, that his endurance is not as long as the Iranian endurance, even though the Iranians are the ones getting pounded.
Well, I wouldn't put too much faith in the TACO idea because the cost right now to Iran is quite high already. President Trump hasn't shied away from causing a lot of damage, inflicting a lot of pain so far. But there is some daylight. This is the one area where we've seen daylight in recent days between Israel and the US, right? After the strikes on the fuel depots and the targeting energy infrastructure in Iran by Israel, we saw a response from the US saying, no, we don't want to do that. We don't want to undermine the energy infrastructure and undermine the potential for rebuilding Iran afterwards. We need this infrastructure to get the economy going and to get revenue flowing into the country afterwards. So I think there's maybe some disparity here, some split in the long-term expectations or goals. The goal of the war has not been articulated very strongly, right? And there's been many comments in the press. Everybody's saying how the US has not really provided a very clear rationale, how President Trump keeps flipping between different goals. So I don't think this is very, very clear now. And
do you have a sense of what, I mean, it seems clear what Israel's agenda has been for 40 years is to get rid of the Islamic Republic. What do you think the Trump version of that agenda is? Even though we've heard a multiple choice of lists.
Well, it's very difficult to second guess President Trump into it's a $60 billion question. I'm not sure what the end game is.
Yeah. Well, we see the outcome obviously is what it is. Let's just wrap up a little bit talking about OPEC. How might the current war, do you think, reshape OPEC plus strategy? I mean, it seems like a year ago, but it was only a week ago that they met to announce a 200,000 barrel a day increase from April 1st. It nearly seems kind of cute and irrelevant by now. But your thoughts on the impact for OPEC plus strategy and production?
I'm not so sure there's going to be a strong impact. The death of OPEC has been announced many, many times, and OPEC is still with us and in many ways getting even stronger than before. I think organizations have a very strong tendency to maintain themselves. And OPEC, I think the takeaways from this conflict are going both ways. It really emphasizing, highlighting how dependent we are on the Gulf region, right? And how dependent we are on OPEC, how critically important the role of OPEC is in ensuring energy supplies, feeding the global economy. This dependence cuts both ways. It's a risk when a conflict like this occurs. It creates a lot of risk to the global economy and to the world, but it also shows that we're dependent on this and we need to nurture this link. And OPEC, I think, is going to continue to play a role. It's going to continue to evolve as it has over the last decades since its creation in the 60s. But we continue to play a very central role in the energy system.
If you look at the forecasting for this year, both by OPEC and IEA and and many other secondary sources, that this was going to be a year of oversupply. It was going to be a year of moderate demand growth, 1 million barrels a day, and ultimately the beginning of the year, which was only 2 months ago, that the oil price forecasting was, as a result of this oversupply and very moderate demand growth, was looking at it was a $60 a barrel average for Brent was the most consistent price forecast for the year ahead, 2026. What's your own sense now, the legacy looking through the fog of this war? Do we return to that, or do we look at a year in which it's a much tighter market and a much higher average oil price?
Well, I think you and I have been in this market, in this industry for a long time, long enough to know that forecasting is a perilous exercise. And we always joke that when there's a very broad consensus in the industry for a certain scenario, that scenario is unlikely to happen. We joked about this last year when everybody was forecasting a price collapse and a massive oversupply. I don't think we expected the joke to be, I don't think we expected the forecast to collapse as dramatically as it has. There's many scenarios we can work out for this current situation. It all depends on the outcome of the war. But we could paint a very bullish scenario. We could paint a more bearish one where there's a slowdown in the economy. The fighting inflicts a cost on GDP growth. Demand slows down and the supply recovers. Very wide range. It's a very unpredictable world. More and more so, it's becoming increasingly difficult to extrapolate from the past to forecast based on traditional models that basically extend time series. And that's partly why we do the work that we do, monitoring the world from space. Geospatial data, real-time intelligence has never been more important. The world has never been more transparent, and this transparency is kind of an antidote against the unpredictability and the uncertainty that becoming so overwhelming.
It does seem that, I mean, going into this war, that we already had the arrival of energy security, supply security rise to the top of most political leaders' inbox. And with that storage, I mean, I suppose China is exhibit A, the amount of oil they put into storage over the last year or two. Your thoughts on that? I mean, that in its own being a new source of serious demand, the storage, having access, security of supply. India, like, for example, has no storage pretty much.
Right. Well, the Chinese buildup in storage has been very dramatic, has been going on for 20 years, 30 years, but has ups and downs. So in the last 3 years, it's accelerated, and within that period, there's been some cycles. Right now, we're in a peak cycle. We're seeing a very rapid acceleration of the buildup in storage capacity, as well as the filling of this capacity. The fill rates seem to be dramatically increasing. And over the last year, the last 6 months in particular, the demand for storage, the demand to reach minimum operating levels in new storage capacity has reached somewhere between 350 and 450 KBD in China. It's likely to be the same in the first half of this year and continue at that's very high rates in the second half. But it's a demand that's for storage. It's not a demand that is for running the economy. So it's kind of a optional, it's kind of a discretionary demand for China. China can decide to slow down this pace of filling or can continue it at the same rate. That's a massive swing factor in supply-demand balances looking forward, right? Perhaps a concern if you're IEM countries and you think about depleting your strategic storage, the concern is that this storage is going to end up in China's SPR.
And even as you think, I would imagine another outcome might be is in this energy security pursuit that the OECD decides to increase their storage requirement from 90 days to maybe 120 days. And that all of these possible outcomes, and I would imagine they're all going to be on the list. But for now, we're going to have to wrap it up. Antoine Halff, co-founder and chief analyst of Kayrros, thank you so much for joining us this week on Halftime Talk from New York. Really appreciate it.
Thank you.